Good morning. I trust all of you are doing well. In today's lesson, I will be discussing the suggested solution for assessment 1 that took place on the 22nd of August 2023. I know that I have indicated on the Telegram group that I will only prepare a discussion session next week, but I've decided to rather do it now because from next week onwards I will need to prepare for my final round of year tests, that being for the final year modules, so I will not be able to do it then. So I'm going to do things a little bit differently compared to what I've done with semester 1's assessment 1. For this lesson I will be discussing the suggested solution, right, instead of working through the assessment from scratch. Okay, and I have already shared this document on the Telegram group. You will find it under files. Please note that I have only shared this document after the portal for submission has closed, so the credibility of assessment 1 was not compromised by this document, and no student had access to the suggested solution during the assessment session. I have also mentioned this on page 1 of the document. It says that the document sets out the suggested solution, and there's a reason why I've put it in bold capitalized letters. I will get to that. The suggested solution for assessment 1 of semester 2 for 2023 for FAC2602, as you should know. It was made available for public view after the portal for submission has closed. Right at that point in time, no student had access to this document during the assessment session, so therefore this document did not compromise the assessment's credibility in any manner. Even though I have received requests to assist students with the assessment itself, I have declined their requests, and please do not request me to assist you with any assessment. I am not allowed to do that, right, because that is against UNISA's code of conduct for students, right, and it represents a transgression of the examination rules. Remember, each assessment is conducted as an official examination, right? Please keep that in mind. So again, for assessment 3, which will also be a written assessment, please ensure that you adhere to the examination rules, right, laid out by the university, and please refrain from asking any third party to assist you with that assessment. Make sure that it is your own work so that you can avoid being flagged for plagiarism by the lecturers. I would also like to indicate that even though this is a fair reflection of the solution to the assessment, it is not the official solution that is used by the FAC2602 lecturers during the marking process. This is just my own version of the suggested solution to the assessment itself. Okay, so it's not that this is the solution that UNISA has prepared and that they use during the marking process, right? But it should give you an idea of the mark that you can expect. Those of you who were able to submit successfully on my modules or through the alternative link. For those who couldn't submit, please do not despair. You still have 3 remaining assessments that you can pass in order to pass the module. Alright, please keep in mind, however, that assessment 3, which contributes 40% to the final mark, is a compulsory assessment, meaning that if you are unable to submit assessment 3, you will automatically fail the module. Alright, however, this is not the case for assessment 1. If you fail to submit assessment 1, you still have the 3 other assessments to make up for it. Alright, but in the case of assessment 3, if you fail to submit, you will automatically fail FAC2602 and you will have to re-register for the module. However, as I've indicated in my previous sessions as well, I will not go into detail regarding the administrative procedures for each of the assessments. The main purpose of these lessons is to help you prepare for the particular assessment, and that you are confident in your ability to complete the assessment successfully. and that you're not caught off guard by the questions that are being asked. Okay, assessment 2 will be a quiz, as I've also mentioned in yesterday's session that I've uploaded on the YouTube channel. Assessment 2 will contain 10 multiple choice questions, or it should contain 10 multiple choice questions, but it can be more. For example, there can be 15 multiple choice questions, as was the case in the past. And you will have to answer these multiple choice questions on the module site. Okay, based on the scenario that they have provided to you. Okay, but I have addressed that in yesterday's session. Okay, so let's get to assessment 1 for this semester. Right, as I've indicated, the assessment contributed 10% or contributes 10% to the final mark. However, those of you who were not able to submit, please move on. Yes, it is unfortunate, but there's nothing we can do about it now except focusing on the remaining assessments, especially assessment 3, which contributes the most to your final mark, that being 40%. And the non-submission thereof could cause you to automatically fail the module. I have noticed that they have changed the rules for this semester. Alright, so assessment 1 counted 25 marks. And according to your required section, you are required to prepare the following statements for the Proton Limited Group for the year ended 31 July 2023. The consolidated statement of profit or loss and other comprehensive income, as I've also mentioned on the Telegram group. This is the most popular statement or group statement that they ask in FAC2602 questions. So please make sure that you are familiar with the principles surrounding that statement. Okay, please ensure that you are able to draft the total comprehensive income attributable to non-controlling interests as well as owners of the parent section. Okay, so that being the bottom section of the consolidated statement of profit or loss and other comprehensive income. You also need to be able to, or you must also be able to eliminate intergroup income and expense items. And then the second part of the required section requires you required you to draft the total assets as well as the total liability sections of the consolidated statement of financial position. So clearly you were not required to draft any pro forma consolidation journal entries, and you were not required to draft the consolidated statement of changes in equity as well as the equity section of the consolidated statement of financial position. So those were not required. However, you will notice in the suggested solution that I have included a non-required section. So in this section I have set out or explained the calculations for the consolidated statement of changes in equity, as well as the journal entries that you could have drafted to better understand the elimination in this question, or the elimination of intergroup items or common items that were evident in this scenario. I would also like to indicate that in yesterday's session, while discussing while working through assessment 2 of the first semester, I accidentally omitted the journal entry. I think it was question 8, alright, of that quiz, which asked you to indicate the correct journal entry to record the NCI share in the subsidiary for the current year. Right, I have shown the correct formula to calculate the NCI share in the current year. However, I have not shown the journal entry. So this is the journal entry to record the NCI share in profit for the current year. So that being in the subsidiary for the current year. You will debit non-controlling interests in the statement of comprehensive income. Alright, so that will be listed or shown in the bottom section, or at the bottom of the consolidated statement of profit or loss and other comprehensive income, as I've already explained. The total comprehensive income attributable to NCI, alright, that will be part of that line item. And then you will credit non-controlling interest as shown in the consolidated statement of financial position, so that being the equity balance for NCI. As you should notice, the NCI share in profit for the current year will increase the NCI balance that will be disclosed in the consolidated statement of changes in equity, and as a result in the consolidated statement of financial position. So please make sure that you take note of this journal entry while working through assessment 2 of semester 1 that I have conducted in yesterday's lesson that I've uploaded on the YouTube channel. Alright, so let's read the background information, or let's just take note of general information. As I've indicated previously, I will not work through the assessment from scratch. Instead, I will be discussing the suggested solution that I've prepared. Alright, so firstly, we need to take note of the general information about the specific group, so the Proton Limited group. As I've emphasized numerous times, in order for you to identify the parent and subsidiary correctly, you need to take note of the group's name. In this case, it is the Proton Limited group. So therefore, Proton Limited is the parent, all right, and Electron Limited, excuse me, I almost said Ryan Limited. Electron Limited is the subsidiary. And in FAC2602, we only deal with groups where there is one parent and one subsidiary, right? So for this question, Proton Limited is the parent, Electron Limited will be the subsidiary. Another way that you could have determined this is by looking at the extract of the trial balances for the two companies. The parent's figures are always listed first and then those of the subsidiary. So as you can see, Proton Limited's trial balance was given first and then the trial balance of Electron Limited. So that is just another way for you to identify the parent and the subsidiary respectively. Our current year, which is, please excuse me for a minute, please. Alright, my apologies. I just had to check something. As I've said, it will be important for you to establish a current financial year, especially when working through later learning units. Sorry. Right, so it is important for you to identify or to determine your current financial year, especially when working through later learning units, especially learning units 6 and 7. Alright, because the group can be formed in the current year as well, in which case you will be required to calculate a pre-acquisition profit as well as a post-acquisition profit for the subsidiary. Only the post-acquisition profit will form part of the group. And then the pre-acquisition profit will be used as part of determining the retained earnings balance at acquisition and then subsequently eliminated. However, that will be addressed in Learning Unit 6. So it was not relevant in Assessment 1. According to your required section, the statements needed to be prepared for the year ended 31 July 2023. So your current year has started on the 1st of August 2022, which is also the date of acquisition. So the group was formed at the beginning of the current year. So in your analysis of owner's equity, you should notice in the suggested solution that you will have an at acquisition section, so the 1st of August 2022, and then you will have a since acquisition to the end of the current year. So from the 1st of August 2022 to 31 July 2023. So in other words, there is not a since acquisition to the beginning of the current year. That section was not relevant in this question. So before reading further, please take note of the general information and keep it in mind while working through the scenario. Alright, so the first required question, so that being the consolidated statement of profit or loss and other comprehensive income. Alright, so you will start with your heading, so Proton Limited Group, and below is the consolidated statement of profit or loss and other comprehensive income for the year ended 31 July 2023. Okay, now for this question, so part A, for part A of the required section, we will start with revenue. So revenue has been given in the credit section for both companies, so that being the 6 million and the 4.1 million. So the total revenue for the group will be 10,100,000 rand. There was not any intergroup sales, or there were not any intergroup sales that you needed to consider in calculating the group's revenue. In Learning Unit 7, you will learn how to eliminate intergroup sales for the current year. Again, this fell outside the scope of Assessment 1. So to calculate the group's revenue, you would just add up the revenue for the two companies, and that will give you the group's revenue for the year. So that being 10,100,000, there were no intergroup sales for the current year that needed to be considered. The same principle applies to cost of sales. You will add up cost of sales for Proton Limited, which is 2,080,000, and then the cost of sales for Electron Limited, 1.2 million. Again, if there was intergroup sales for the current year, the elimination of intergroup sales requires us to decrease revenue as well as cost of sales. So therefore, there would be a negative adjustment in the cost of sales line item. Again, please refer to Learning Unit 7 for that particular principle, or to study the elimination of intergroup transactions. Alright, now subtracting cost of sales from revenue will give you the gross profit for the group for the year, which is 6,820,000. Now we get to other income. Now, I've noticed a lot of you did not eliminate the intergroup dividend because it was not stated in additional information that the dividend received was recorded in other income. Alright, as I've also explained on the Telegram group, any absence of information that states otherwise, right? You may assume that both companies accounted for the dividend declared by the subsidiary, so that being the dividends paid of 100,000 by the subsidiary. Okay, so you may assume that both companies accounted for that dividend. So meaning you may assume that the parent, so Proton Limited, has recorded its share of the subsidiary's dividend in its own income. Okay, so in other words, you may assume that Proton Limited has recorded its share of the dividend received. Also, Proton Limited has recorded the intergroup dividend in its other income. So it forms part of the 450,000 that is disclosed in its own trial balance, because there is not information that states otherwise. In Learning Unit 8, you will study the principles regarding the treatment of ordinary dividends during consolidation, because you can have four types of situations when it comes to dividends. I will just summarize them briefly. So the first type of situation is the one that we have here. The subsidiary has declared dividends for the year and paid those dividends, and both companies accounted for that dividend. Alright, so meaning that the parent has recorded its share as part of its income for the year. Okay, then you will need to eliminate the intergroup dividend from other income. The second type of scenario or situation is where the subsidiary has declared dividends for the year and recorded it in its own records, but the parent did not account for its share in that dividend, meaning that the parent did not include its share as part of its other income. Right, so there's no elimination of the intergroup dividend. Okay, or otherwise you would need to record the dividend received in its own financial records or in the parent's own financial records, and then eliminate that dividend again. Okay. The third scenario or situation is where the subsidiary declared dividends for the year, but neither of the two companies accounted for that dividend. So there is no elimination of an intergroup dividend because the intergroup dividend has not been recorded in the parent's other income. So in this case, we will only draft the journal entry to account for the dividends payable to non-controlling interests. Alright. And then the fourth one, I can't really remember what's the fourth one, because we have where both companies accounted for the dividend, and then where the parent forgot to account for the dividend. Oh, that's the other way. The other one is where the parent has accounted for each share of the subsidiary's dividend, but the subsidiary did not account for that dividend. Alright, again, this is just an overview of the treatment of dividends during consolidation. The detailed principles are discussed in Learning Unit 8, so please work through that learning unit in order to study those principles. I've just given you a brief overview of what you can expect regarding the treatment of dividends in later learning units. Okay, but for the purposes of this assessment, you should have assumed that the intragroup dividend, so the dividend received by the parent from the subsidiary, has been included in its other income. And since it is an intragroup item, it should have been eliminated for consolidation purposes. Because, again, the group cannot pay dividends to itself. So therefore, the intragroup dividend should be eliminated. So the journal entry to eliminate the intragroup dividend, as well as record the NCI share in that dividend. Remember, the other portion of the total dividends paid by the subsidiary of 100,000 was paid to non-controlling interests. Okay, so NCI also has a share in that dividend. Alright, now, in order to eliminate the intragroup dividend, we will first need to calculate the percentage interest of Proton Limited in Electron Limited's ordinary equity. According to the background information, on the acquisition date, Proton Limited acquired control in Electron Limited, so that makes Electron Limited a subsidiary of Proton Limited, by purchasing 108,000 shares in Electron Limited. Again, in this scenario, we do not have any preference share capital in issue. Preference shares and preference dividends are addressed in Learning Unit 9. Again, falls outside the scope of Assessment 1. So to calculate the percentage interest of the parent in the subsidiary's equity, so that will be the percentage used in the analysis of owner's equity calculation. I've also shown the formula right here. You will take the number of ordinary shares that are owned by the parent, so Proton Limited, divided by the number of ordinary shares issued by the subsidiary, so Electron Limited, times 100, because you're calculating a percentage. So 108,000 shares have been purchased by Proton Limited, and 180,000 shares have been issued by the subsidiary. Just making sure that it is still recording. So that will give you a 60% interest in equity, right? So Proton Limited has a 60% interest, so the NCI or non-controlling interests will take up the remaining 40%. According to the trial balance, the total dividends paid by the subsidiary amounted to 100,000. So in the analysis of owner's equity, you should have disclosed this in the current year section, or since acquisition to the beginning or to the end of the current year. Dividends paid is 100,000, of which 60,000 has been paid to Proton Limited based on its percentage interest of 60%, and the remaining 40,000 has been paid to non-controlling interests. Alright, so back to our journal entry. So keep in mind that the 60,000 is included in the 450,000, the other income for Proton Limited for the year, because there is not information that states that it was not recorded by the parent. So you should have assumed that it is part of other income, even though it is not clearly stated in the required additional information. So the journal entry, again, as I've mentioned in the beginning of this lesson, the journal entries were not required. These are just included in the suggested solution to help you understand the treatment or the adjustments that we make in our respective parts, that being parts A and B. So you will debit other income for Proton Limited with 60,000. This is the amount calculated in the analysis of owner's equity, 60% of 100,000. You will also debit non-controlling interests balance in the statement of financial position, so that being the equity balance for non-controlling interests by 40,000. So in your consolidated statement of changes in equity, which was not required, you would have shown this as a negative adjustment in the NCI column. Okay, dividends declared and paid ordinary 40,000 is subtracted in the NCI column. according to this journal entry, and then we will credit the dividends paid line item, which is shown under debits. So you will credit dividends paid by Electron Limited, and the amount there is 100,000. So this is the elimination of the intragroup ordinary dividend and recording the NCI share in the ordinary dividend. Okay, so in your consolidated statement of profit or loss and other comprehensive income, you will add up other income for the two companies, so 450,000 plus 180, and finally you will subtract 60,000. That is in accordance with the journal entry. Other income is debited, so this is shown as a negative adjustment. I've also referenced this to C1. C1 is the analysis of owner's equity calculation. Now that I've mentioned the analysis of owner's equity, I've also received a question on whether the analysis of owner's equity should be included as part of your answers. It is highly recommended that you include it as part of your calculations because there is a calculation tool. So if you have calculated the percentage interest incorrectly, you will at least earn marks for the allocation thereof. Okay, but again, if you did not disclose the analysis of owner's equity as part of your calculations, but still calculated the correct amount for goodwill, okay, for example, you should earn your marks for goodwill, as disclosed in the consolidated statement of financial position in the total assets section. So if you've managed to calculate goodwill without the analysis of owner's equity, you will still earn your marks. However, I highly recommend that you include the analysis of owner's equity. It will just give that additional level of assurance that you will earn your marks. Right. So no, it is not an official requirement that you include it as part of your calculations, but it is highly recommended that you do include it as part of your calculations. In case you've calculated the percentage interest incorrectly, or you've made a mistake on splitting the profit after tax, for example, between the parent and non-controlling interests. So please include it as part of your calculations. I highly recommend it again. Alright. So C1 is the analysis of owner's equity, and I've already addressed this journal entry. So other income for the group is 570,000. Alright, the other expense items are relatively easy to calculate. You will just add up the amounts for the parent and subsidiaries respectively. So other expenses will amount to 1,070,000. There was no intragroup expense item according to additional information. Alright, again, intragroup transactions are dealt with in Learning Unit 7 in detail. The same applies to finance costs as well as the income tax expense. Alright, so, and there was no other comprehensive income. Right, according to your additional information, there was no indication that a revaluation occurred within the current year. Yes, they have given you the other components of equity balances as at the 1st of August 2022 for the two companies. However, there was no revaluation conducted in the current year. Okay, these were the balances at the beginning of the year and at the date of acquisition. So other components of equity at the 1st of August 2022 for the subsidiary it was 150,000. As you should know or should have concluded, the date of acquisition is the same as the beginning of the current year. So in the analysis of owner's equity, you should have disclosed other components of equity in the at acquisition section as 150,000. Okay, the same applies to retained earnings. It was also given as at the 1st of August 2022, the date of acquisition, and share capital. Alright, according to additional information point 1, and this will also be the case in any other question in FAC2602, the issued share capital of both companies remained unchanged since acquisition. So the closing balance of share capital, as reflected in the trial balance, was also the balance of share capital at the date of acquisition, because changes in ownership will only be addressed in FAC2764. Alright, so that was the balance of share capital that you should have entered in the at acquisition section. Alright, I will later on address the calculation of goodwill. Alright, so the total comprehensive income for the year for the Proton Limited Group amounts to 4,229,600 Rand. And now we need to split this between the parent and non-controlling interests. Now, please note that you will not split the total comprehensive income for the year according to the percentage interests. So you will not calculate, for example, 60% of this amount and then disclose this as owners of the parent, or the owners of the parent amount. The same applies to non-controlling interests. You will not calculate 40% of this and disclose it right here. That is not how this is done. Alright, I will show you the first calculation because there is an alternative calculation for this. The first approach will be to first calculate the non-controlling interests, alright, or the total comprehensive income attributable to non-controlling interests, and this is calculated in the analysis of owner's equity. So refer to C1. So according to C1, since acquisition to the end of the current year, the profit after tax for the subsidiary has been given in additional information point 2. Assume that the profit after tax for the current financial year amounts to 2,003,200 Rand for Electron Limited. So that has been given. However, I have included a note where I have tested for the accuracy thereof. So in other words, you can also confirm the accuracy of this amount by calculating the profit after tax for Electron Limited. So you will add up all the income items and subtract the expense items. Or you can follow the statement of profit or loss and other comprehensive income format. So revenue less cost of sales gives you the gross profit, add other income, and then you subtract all the expenses. Then you get the profit of before tax, and then you just subtract the income tax expense, and you will arrive at the same amount, okay, as the profit for the year for Electron Limited. Also keep in mind that profit for the year and profit of tax is the exact same thing. Alright, the profit after tax is the profit for the year, okay, excluding other comprehensive income. So the subsidiary's profit after tax, in this assessment we haven't dealt with any unrealized profits or losses. Again, that will be addressed in Learning Unit 7. So we can proceed to split this between the parent and non-controlling interests according to their percentage interest. So the amount that goes to NCI is, okay, 40% times 2,003,200. This will then give you 801,280. Alright, and this is the total comprehensive income for the group that goes to NCI. Okay, 801,280. So this will be disclosed in the NCI line in the total comprehensive income attributable section. So after you have calculated the NCI's portion, the owners of the parent will take up the remaining or the balancing figure. Alright, so you will take the total comprehensive income for the group and then just subtract the portion that was allocated to NCI. So then you will get 3,428,320. Now this is the approach that I recommend, is first calculate the NCI's portion in the analysis of owner's equity. However, it can get more complicated, especially where you have preference share capital in issue. Again, we will address that in Learning Unit 9, as well as unrealized profits or losses that require elimination. Okay, that will affect the total comprehensive income attributable to NCI. But that was not within the scope of the first assessment. Okay, we will get to that in Learning Unit 7 to 9. Right, or 7 and 9, because in 9 we will deal with preference shares as well as preference dividends, and in Learning Unit 7 we will address the elimination of intragroup transactions, including unrealized profits, losses, and so on. Alright, so the total comprehensive income attributable to owners of the parent, or just simply put the parent or Proton Limited, is 3,428,320. Again, these two should add up again to the total comprehensive income for the group. I have included an alternative calculation for the owners of the parent portion. Okay, so let me explain this calculation quickly. So I've calculated the profit after tax for Proton Limited, okay, using the figures reflected in its trial balance. Right, so I've added revenue, other income, and then subtracted all the expense items. So you calculate a profit for the year, or profit after tax, for Proton Limited as 2,286,400 Rand. Alright, then we add the parent's share in the subsidiary's profit for the year, okay, which we have calculated in the analysis of owner's equity. So in addition to its own profit, the parent also has a share in the subsidiary's profit after tax, which we have calculated to be 1,201,920. So that being 60% of this amount. Okay, this is then added to Proton Limited's own profit for the year. But then we need to keep in mind that Proton Limited's profit for the year includes the intergroup dividend that must be eliminated for consolidation purposes. So therefore we need to subtract the intergroup dividend received of 60,000. And this will also give you the total comprehensive income attributable to owners of the parent of 3,428,320. Again, this calculation was not compulsory. It is just an alternative way of confirming the correctness of that amount. However, it can get more complex in later learning units when we actually deal with intergroup transactions as well as preference shares. So again, I recommend that you first calculate the NCI portion and then just calculate the owners of the parent as the balancing figure. Okay, for assessment 1, you could also have done this using this calculation. Alright, again, just an alternative for that amount. Also take note that there was no other comprehensive income that was allocated to owners of the parent. Okay, then we move on to part B, which required us to complete the total asset section as well as the total liability section. Alright, so let's first look at our asset section. So for property, plant and equipment, again, it has been disclosed at carrying amount. How do we know that it has been disclosed at carrying amount? Because accumulated depreciation has not been disclosed separately in the credit section. Okay, if accumulated depreciation was disclosed separately, you would need to subtract that from the debit balances, okay, for property, plant and equipment, because then it was not shown at carrying amount. However, for this question, property, plant and equipment has already been shown at carrying amount in the respective trial balances. So the group's property, plant and equipment will just be the sum of those two, giving you 9,531,600 Rand. Alright. Then we get to goodwill. Alright, again, in order for you to calculate goodwill correctly, you need your analysis of owner's equity, the at acquisition section. Alright, so remember, goodwill is calculated if there was an acquisition at a premium. Alright, what do I mean by this? I mean that the parent paid more for its investment or its share in the subsidiary's equity than it should have paid. Right. In this question, Proton Limited paid 2.8 million Rand in consideration, okay, for its investment in Electron Limited. This is confirmed or given in the trial balance in the debit section. Investment in Electron Limited, 2.8 million. And for the purposes of this module, we will also assume that the cost of the investment equals its fair value. Alright, so we do not have to adjust the consideration amount of 2.8 million Rand. Alright, so that has been given. Alright, then you need to calculate the total net asset value or the total equity share of the parent. Alright, so that being the 2.73 million Rand. How did we calculate this? We have split the equity balances of the subsidiary between the parent and non-controlling interest based on their percentage interest, okay, respectively. Alright, so the 2.73 million is calculated as the sum of these three amounts. Alright, the 300,000, 2.34 million, as well as the 90,000. Alright, when you compare this to the consideration received of 2.8 million Rand, we can clearly see that the consideration exceeds the net asset value attributable to owners of the parent. So the difference between these two will then be calculated as goodwill, and that will be 70,000. As I've also mentioned in previous lessons, goodwill is 100% attributable to owners of the parent, so no portion is allocated to NCI. This effectively means that the same amount will be shown in the total column right here. Okay, so goodwill has been calculated as 70,000, and according to additional information point 1, it is the group's policy to show goodwill at cost less impairment, and goodwill was not impaired during the current year. Impairment losses on intangible assets such as goodwill will only be addressed in FAC 2764. So meaning, for the purposes of this module, you will not be required to adjust the goodwill balance, okay, that you have calculated in the analysis of owner's equity. So if you calculate 70,000 as a difference between these two, that will be the final amount for goodwill that you will disclose in the consolidated statement of financial position. So under non-current assets, goodwill, according to C1, again, C1 is the analysis of owner's equity, amounted to 70,000. I have also included the journal entry to eliminate owner's equity of Electron Limited at acquisition. Right, so you will debit all the equity balances for the subsidiary at acquisition, and goodwill has been calculated as 70,000, which must be disclosed as a non-current asset in the group statement of financial position, and then you will credit the investment in Electron Limited as reflected in the parent's records, so that being the 2.8 million, and then you will credit the NCI balance by 1,820,000. Alright, this is the elimination of owner's equity of Electron Limited at acquisition. So in the consolidated statement of financial position, you should not disclose the investment in Electron Limited, okay, in the group's statement of financial position, because that is a common item that requires elimination. And the elimination has been done in journal entry 1. Okay, so goodwill will be disclosed as 70,000. And then investment in debentures, okay, will also be disclosed as a non-current asset, right? Because they do not give us enough information regarding the redemption date, so we have to assume that it will be a non-current asset in both companies' records. There is also no evidence that suggests that the parent has invested in the subsidiaries' debentures, because otherwise that would be common items that we need to eliminate again. However, for this question, the investment in debentures is assumed to have been made in external parties or concluded with external parties. So therefore, the group's investment in debentures will just be calculated as the sum of the two companies' investments. Alright, so the total investment in debentures for the group is 1,530,000. There is no intra-group portion that we need to eliminate for consolidation purposes. Right, then we get to our current assets. Again, inventories as well as other receivables will just be calculated as the sum of those two line items for the two companies. Alright, there was no intergroup sale of inventory addressed in Learning Unit 7. And then cash and cash equivalents. According to our debit section, we have ABC Bank with a balance of 369,200 Rand. Alright, so clearly this is a favorable bank balance, so therefore it must be disclosed as part of cash and cash equivalents. Right, so your total assets, so that being the sum of your non-current assets and current assets, amounts to 14,198,600 Rand. Alright, then we get to our total liability section. Again, the group's long-term borrowings, okay, or long-term loan for the group, will in total be 2.5 million Rand, which is calculated as sum of 1.4 million and 1.1 million. Alright, you should also have noticed that there was an intergroup loan, or there were intergroup loan balances, because we have a loan payable to Proton Limited, so that is disclosed as a liability in Electron Limited's records, okay, 800,000, and in Proton Limited's records, this will be shown as a receivable or an asset. The loan receivable from Electron Limited, 800,000. Remember that these two balances are intragroup items or common items. And since the group cannot grant loans to itself, these two must be eliminated against each other. So according to the pro forma consolidation journal entry section, to eliminate the intergroup loan balances, we will debit the loan payable to Proton Limited because that is a credit balance in the subsidiaries record. So to eliminate it, we will debit that balance. And this is just the name of the company to which the account refers, because in Electron Limited's records it says loan payable to Proton Limited. Alright, so we will debit the loan payable to Proton Limited and we will credit the loan receivable from Electron Limited as reflected in Proton Limited's records, both with 800,000. Okay, so those two are just eliminated against each other. Again, this journal entry was not required. But if you have shown, for example, loan payable to Proton Limited as part of long-term borrowings or as part of the group's non-current liabilities, that would be incorrect, right? Because that is a common item that requires elimination. So in the group statement of financial position, you cannot show this amount as well as this one. You cannot show loan receivable from Electron Limited in the assets section. Okay, because again, from the group's perspective, it cannot issue or grant loans to itself. Okay, please remember that. So these two are just eliminated against each other. When we look at our current liabilities, we have trade and other payables, right, in our credit section. So the total trade and other payables for the group is 1.3 million rand. Again, there was no intergroup balances involved, or there were no intergroup balances involved. And the final current liability that we need to disclose is the bank overdraft at Horizon Bank or Horizon Bank, and that will be disclosed as 259,000. Alright, so total liabilities for the group amounts to 4,059,000 rand. Again, you were not required to calculate or to disclose the equity section in the consolidated statement of financial position. Alright, part A counted 15 marks and part B contributed 10 marks to the total of 25. Alright, so this is just the analysis of owner's equity. Please make sure that you study this calculation carefully. And again, the non-required section has just been included for completeness. Right, so no marks will be allocated for this section. It's just for you to use when preparing for the remaining assessments, especially assessment 3, which will also be a written assessment. So please make sure that you also work through this consolidated financial statement. Alright, you will see that I've included certain notes right here, and this will be the total equity balance that you will disclose in the consolidated statement of financial position. So if you want to confirm whether your consolidated statement of financial position is in balance, you will add up, or you will take the total equity balance of 10,139,600, and then you will add your total liabilities, which we have calculated to be 4,059,000. The sum of those two should equal total assets, okay, of 14,198,600. Okay, that is just for correctness, or to make sure that your consolidated statement of financial position is in balance. Right, but again, this was not required in assessment 1. Alright, only parts A and B were required. And then the journal entries have also been included to help you better understand the principles that we have applied in drafting parts A and B. Alright, ladies and gentlemen, that is all from me for today. I wish you all the best with your preparation for assessment 2 that will take place on the 12th of September 2023 at 6 p.m. again. This is the last lesson that I will upload for a while, as I need to focus on my final year modules during the coming weeks. But again, you are more than welcome to engage with me on Telegram. I will assist you as soon as I possibly can. I hope you have enjoyed this lesson, and I hope that you have taken note of your mistakes. Again, if you were unable to submit, please move on. I know it is absolute torture that you could have earned good marks for the assessment, but you were unable to submit due to system issues. There's nothing we can do about it now, right? We need to focus on the remaining assessments. So that being assessments 2 to 4. Alright, especially assessment 3. Okay, that will take place later in the year. I think it will take place somewhere in October. I'm not sure of the exact date, but it should be in October. Right, enjoy your afternoon or evening whenever you are watching this. I will see you in the next lesson. Goodbye.